2015 closed with some positive signs locally, including strong retail activity and rising consumer confidence. However, it has been a sobering return from the festive season, with confidence being challenged from a number of angles. Geopolitical tensions were heightened through much of last year, and the markets returned this year to an increase in tensions in the Middle East, in particular Saudi Arabia cutting ties with Iran after the execution of a prominent Shiite cleric, and in Asia, with North Korea conducting nuclear tests, possibly a hydrogen bomb. This all coincided with a very rough start to 2016 for China's stock market, with the Shanghai Composite Index down 7% on its first day of our new year, and then again limit down later in the week. Not so much due to poor economic data, which admittedly has been fairly evident, but more so due to the end of the 6-month ban on selling stocks owned by major shareholders. The other main news out of China has been a surprise devaluation in the Chinese yuan, with the People's Bank of China happy to weaken their currency to help their slowing economy, which in turn has pushed our Aussie dollar back below 70 cents after a brief foray above 73 at year end. Like last year, it looks like a question of confidence locally. Can we maintain business and consumer confidence despite these challenges from overseas, and with plunging commodity prices adding to the equation, with oil touching a 12-year low? The latest ANZ Roy Morgan consumer survey revealed an elevated level of confidence, still helped by lower petrol prices and the low interest rate and $1 environment. So for now, consumers are taking heart in reasonable local conditions and turning a bit of a blind eye to some of the challenges overseas, and what looks like a really challenging year for emerging markets, and in particular China. Recent jobs figures show that jobs growth has primarily been in the services sector, helped by accommodative local conditions and an uptick in business confidence. So the positive trend in our jobs market is offsetting headwinds from overseas and offsetting the easing in the strength of our housing market with a recent fall in building approvals. Not a lot of local data due out over the next few weeks. However, we'll provide a more detailed view of the Aussie dollar next week and how we expect it to trend in the months ahead. In the meantime, it will be a rough ride on stock markets, but hopefully not all on the downside. Until next time, that's the market update from Bendigo Bank.